Okay, good afternoon, all. Welcome to QuickBooks Intermediate. My name is Damon Watkins. I'm the Director of Finance and Operations for Cal Poly CIE. This is my third class relating to QuickBooks for this year. Just to highlight, we do a beginner's class, an intermediate, and then we do an advanced tax reporting class towards the end of the year. One of the things I'd just like to highlight, piggybacking off what Madison, is just to talk about some of the programs that the SBDC does have and some of the services that are provided. If you are not an SBDC client at this point in time, I highly recommend that you do get signed up for these services. They are completely free. We offer a number of grants through the state and the federal government to support small business and small business growth. We provide counseling sessions, attorneys, and any other resources that are needed to move a small business forward. Again, all of these services are provided completely for free through state and federal grants. So please take advantage of these if you ever have not had the opportunity to take a closer look. With that said, we're going to spend some time today going through QuickBooks Intermediate, and I want to start off where I left off at my last course, which was my beginning. And so before I dive into QuickBooks Intermediate, one of the things that I'd like to talk about is what we have done up until this point, where we're at, and what we're looking to do today. So basically, our beginner's class is really about getting QuickBooks set up, from the installation process to going ahead and making sure you have the relevant information in QuickBooks to be set up as a business or as a sole prop, depending on the structure of your business. This includes getting registered with the Secretary of State so that your business is a legal entity in the state, thus generating a tax ID number, which in turn enables us to do things like report sales tax, income tax, so on and so forth. At this point of our journey, I'm assuming that these things have taken place, that you are registered with the Secretary of State. You do have your chart of accounts set up, you have your customers set up, and you have your vendors/suppliers set up. These are all things that I spent some time going over in our beginners class, and we will be piggybacking off that today as we proceed through the intermediate class. I would also like to highlight that everything that I present today and show today will be sent out at the end of this particular presentation in a study guide. The study guide covers everything that I go over in a calendar year relating to training for QuickBooks. This is inclusive of the beginner class, the intermediate, and the advanced class. So again, no notes are needed for today. Everything will be sent out afterwards for your reference. With that said, at this point in time, I do like to just take a step back and ensure that a number of things have taken place before we proceed today. Ensuring that the chart of accounts is structured correctly based on our conversations from the beginning is going to be really important. Some of the things that we're going to work through today involve the banking and the linking of banking accounts up in QuickBooks, how we go about coding these transactions. I will also touch on invoicing, payment of bills, the processing of sales receipts, the receipt of checks and processing them against invoices. I will spend a brief amount of time on journal entries. And then lastly, but not leastly, we'll spend a little bit of time in regards to job costing and cost basis associated with products and services. This is actually a rather small group today that we have in attendance, and I actually prefer that because it starts to make this particular presentation more interactive. One of the things I don't like to have happen is me sit here and just punch through slide decks and show you guys pictures and talk about it. The smaller the groups, the more interactive we can be in regards to what's taking place. So as I move my way through these slide decks, please do not hesitate to force me, raise your hand so that Madison can pose a question. One of the key concepts of QuickBooks as we move forward is having a clear understanding of what's taking place and why we are doing it. And the only way for me to make you feel comfortable with that is answering any questions or concerns that you may have around the topic. Again, I've afforded us plenty of time in this class to make sure that we have the time to answer any specific questions. This presentation normally takes about 90 minutes, and the reason for the additional time at the end is if we need to do any one-on-one sessions, I could certainly put some time aside at the end to go through these with you individually. With that said, I am a consultant for the SBDC, and as such, after this presentation, if you wish to sit down with me and do a one-on-one consultation, that is not a problem at all. I can follow up with my contact information, and we can schedule that as we move forward. The one subject that I tried to stay away from today only because it can have a habit of taking us down a rabbit hole, is tax reporting. Now, I will spend a little bit of time just ensuring that we're capturing it correctly from a reporting perspective, but I try to hold off on doing anything tax related closer to the end of the year, as I have a specific class behind that will address many of these topics. With that said, if you do have a specific question, I will do my very best to answer them. With that said, let's get kicked off on QuickBooks Intermediate. Okay, so leading off from what I just spoke about, some of the items that we have currently set up on QuickBooks based on our last interaction. We have our chart of accounts all nicely set up. So the default chart of accounts that QuickBooks provides us tends to be a really long list. One of the pieces of homework that I hand out very firstly when it relates to the chart of accounts is, number one, go in and make sure that you're comfortable with your chart of accounts and how it relates to your business. Also, if there are any specific line items in there that you are not using currently and do not relate to your business, go ahead and hide them. Make your chart of accounts as condensed as possible. It will make it easier from both a reporting perspective and understanding what is taking place with your business. Secondly, I'm assuming at this point in time, all your customers are set up in QuickBooks to be able to receive payments and issue invoices out. That way you have money coming in the door and we can manage cash flow, which we do spend some time talking about today. Then we have suppliers. These are your vendors that you interact with directly. These vendors will be set up in your system with W-9s on file. And more importantly, if any of these vendors are 1099 reporting, we will have that set up in there. We will spend a brief amount of time talking about 1099 reporting as it relates to suppliers, as invariably this question does come up. Lastly, but not leastly, our products and services are set up within the system under lists. These are the services and or products that we are providing to our customers out there. The one area that I will touch on briefly today is establishing what cost bases are behind products in particular, to understand that the system can then in turn calculate things like margins for you and help you manage your cash flow. Cash flow is something that I really spend quite a bit of time on in QuickBooks, as it's one of the biggest hurdles that small businesses need to overcome when starting up, is the management of cash flow. And this is where QuickBooks becomes a great resource moving forward to not only understand where your business is at today, but it enables you to forecast out as we move forward. A lot of what I spend time going over in my advanced class is the ability to generate pretty concise, direct reporting as it relates to both cash flow and liability reporting through QuickBooks. This enables you as the owner of your company to plan out both the growth and, more importantly, chart out what you expect to interact with as it relates to both your clients and the products and services that you are providing. I'm going to pause there for a second, see if anybody has any questions before we move on. One last thing before we jump on to the next slide. If there's anything in specific that I did not touch on, again, this is a smaller class, I can certainly address a specific topic if you wish it to come up. Just let me know or raise your hand with Madison. Owen, question.
Yeah, I was just wondering what's included in suppliers and vendors. Like, that's not necessarily just like a part vendor. That can be like a person who you're paying.
It's anybody that you're paying money to. It's the way I want you to think about suppliers in particular. And when we talk about suppliers, we're talking about vendors at its core, right? These are individuals that are either providing you with a product or service that you in turn are then paying them for. Really important to keep in mind. And actually, since you brought it up, maybe we should start there with the customers and the suppliers, because it's something that there's one specific area of this section that I want to talk about, and that's 1099 reporting, right? This comes up all the time when it comes to intermediate reporting in QuickBooks and my classes. So I'm just going to take this topic and address it right up front in regards to what that means to QuickBooks, you as the business owner, and in turn, the vendor that you're paying. So when we are setting someone up as a 1099 reporting in QuickBooks, what it basically means is that individual is an independent contractor. He is a business unto himself, right? Which means that when we pay him, we do not incur any of the tax liability associated with that payment to that individual, right? The reporting or the tax liability is solely on that individual to do the reporting for. But what does that mean to you as a business owner dealing with that? And more importantly, how do you set it up in the system so that is taking place? So I'm going to jump into QuickBooks, and I'm actually going to show you an example of exactly what we're talking about.
And Mary asked if you could just repeat what the question was, because she did.
Sure. Mary, the question at hand is, what is a vendor slash supplier in regards to QuickBooks? And the answer to the question is anybody that is paying you money for either a product and or a service. Okay, so going up to my search bar at the top corner of the screen, my QuickBooks does look a little bit different to everyone else. If you're wondering why, I have the accountant's version of it. I'm actually going to share my screen so you can see. And voila, we are in QuickBooks. And let's go into our customers. Let's actually go to our vendors. Okay, so at this point in time, I'm guessing that you're pretty comfortable navigating QuickBooks and adding in all relevant information as it is associated with both the customer and the vendor. But I want to take 2 minutes just to take a look at adding a new vendor to QuickBooks and how we can make sure that the 1099 reporting takes place. So a couple of things to keep in mind when setting this vendor up, right? It's really important when we are doing 1099 reporting that we get a W-9 on file, right? Whether it's as a sole prop individual under his social or as an entity under a tax ID number. We complete the relevant information on this page right here, i.e. company name, vendor displayed name, contact information, email address. But the most important box on this page for 1099 reporting is way down at the bottom over here. You'll notice under additional info, there's a little box that says track payments for 1099. Any vendor tells you that there are 1099 reporting, that box has to be checked for 1099 reporting to take place. Now, here's why this is so important and why I like to start off here, okay? And I have encountered this in the past, which is why I like to highlight this. When you are dealing with a 1099 reporting, it means that the onus is on the individual that you paid to report to the IRS the income that's been generated. Now, the way that the IRS is able to track that is before January 30th of the following year, we have to issue out these 1099s. Now, the good news is once you tag this box in QuickBooks for this vendor, QuickBooks knows to track all of those payments that are going out for the specific vendor, and that at some point in the future, we will be generating a 1099. The good news is as long as you check that box, we can order the 1099s in December. They come into your office. They are a 3-ply piece of paper. When we go to enter the 1099s, it's simply the system pulling this information out and us printing off the 1099s. Now, when you print off a 1099, there are 3 copies that are generated. One is for you. One is sent to the individual who is being 1099, and the 3rd copy goes to the IRS. Why is this so important? Here's the deal. If you did not check that box and the individual told you that there are 1099 reporting and you don't generate that 1099, that tax liability resides with you, not with the individual on the 1099. So again, just make really, really clear if you are dealing with a 1099 individual that you get the W-9 on file and that you check the box associated with 1099 reporting. That's it. Any questions around 1099 reporting and the setup? Oh,
could you just give an example of like what would be 1099 versus what wouldn't? Because it kind of relates back to like an employee versus a contractor, right?
Totally. So the best way to think about this is it's any kind of professional services outside what you traditionally do from an operating perspective. So as an example, an independent contractor could be anybody from a plumber who decides to come out to a marketing specialist that you're working with to promote your business, right? Independent contractors tends to be work that is defined over a specific period of time with a set amount to be paid. So understanding the difference between what is just regular hourly work and what is actually independent contractor work, this is something that the state has cracked down on a lot over the last 2 years. And it's something, the reason why I highlighted so much within the system as a whole to make sure that it is set up correctly. So that's your best way of thinking about what an independent contractor is in regards to your business and how it relates, okay? And the key point that I really just want to convey here is that if you do not track correctly, that liability can come back on you, okay? Ignorance is never an excuse when it comes to the IRS, unfortunately, no matter how much we want it to be. Okay. 1099 reporting. I know we said we weren't going to talk much about taxes, and that's why I tried to get it out of the way early. Before I move on from this topic, any questions, concerns around vendors and 1099 reporting? Again, I go into a lot more depth on my end of the year class in regards to taxes. I should walk you through the process. Super easy as long as it's set up correctly within QuickBooks. Good to go. Okay. Lastly, but not leastly, let's talk about other functions in QuickBooks that I'd like to spend some time just going through. And I'm going to touch on one of the most important aspects of keeping QuickBooks on track. More importantly, ensuring that your QuickBooks ties back to your one source of truth. You're going to hear me use that expression more than once. But just talking about the other functions within QuickBooks that we will touch on, we are going to touch on reconciling accounts today. It's probably one of the most important aspects of QuickBooks. In fact, if you were to ask me what is the one thing that I would have you complete every month bar any task, it would be that. Validating what you have in QuickBooks against what you have in the bank and tying out is your best way of ensuring that you're capturing all your expenses and that everything is being reported and tracked correctly. I spent quite a bit of time today going over the process that we utilize to do that. Once it's set up, it is a very easy system. And as long as you are reconciling your accounts on a monthly basis, then it's never an issue. With that said, let's just talk about that word reconcile. I know it's extremely intimidating when we first hear it. It is probably the single easiest activity that you will ever do within QuickBooks. And I'm just going to put it out there. I will volunteer to meet with anybody at any time to walk them through the process for the first time. Because once I do it, even just for the first time, you will realize how easy it is. The other part is it will always ensure that your balance in QuickBooks ties directly back to your balance at the bank. And I talk about the bank quite a bit because your bank starts to become your one source of truth in regards to what your bank balance is. And we're going to start to touch on things like Square payments, Venmo payments, how they enter into QuickBooks, how we tag them, how we correlate that information back to our bank. This is everything that we're talking about. File sales taxes. Don't talk about sales tax today at all. If you wish to sit down with me and go on a one-on-one session, I will gladly do it. I tend to find that sales tax specifically is very specific to the business and the sector that you're in. Again, I go into quite a bit of detail in my advanced class. With that said, if this is something you want to spend some time talking about, please reach out to me after this meeting and we can certainly set up a one-on-one session either by Zoom or in person to go over this. Lastly, but not leastly, we talk about budgets. Budgets are really, really important. A big part of why we do these exercises within QuickBooks is to ensure that we're capturing both the income and revenue side and the expense side so that we can build a budget for the following year. All the activities that take place in this year enable us to then build a budget for next year that we can use to track ourselves against. I can't highlight enough how important it is to actually have a budget. So many individuals that I deal with don't have a budget. And the way to think about a budget is it's really a roadmap to success. It's kind of like going to the bowling alley and having the bumpers on the side when you throw the bowling ball. That's what a budget does for you. It's not a document that you write out once, put in a drawer, and never look again. You should be looking at your budget at least once a week right? To make sure that you're on track, that you have a clear understanding of where you're spending money. And conversely speaking, to really understand where your business is heading. Can't highlight enough what a budget and or a business plan will do for you in this day and age. More importantly, we have the ability to be able to enter a budget in QuickBooks, which makes life that much easier when we start doing things like budget versus actuals tracking to make sure that you are on course to be successful. These all put together really give you a clear insight into exactly where your business is at, what your cash flow looks like, and more importantly, provides you with the information to grow your business over a period of time. I stated this at the beginning, and I will state this again. The biggest hurdle that small startups have to overcome in the first 2 years is cash flow. It's not anything else. It's not a product, it's not a service. It's managing cash coming in and managing cash going out the door and understanding what that relationship looks like. Lastly, but not leastly, we're going to talk about job costing. In specific, I'm actually going to talk about cost basis along those lines. So one of the things that I tend to find a lot of the time when I start to do these sessions with QuickBooks in regards to people providing either a product or a service is we need to understand what your margins are relating to your business. The only way to understand what your margins are is to understand what it costs for you to do the business. Now, that's pretty straightforward when we're dealing with a product, okay? As an example, let's just take this great little cup here, right? The cup has a lid, the cup, and a little wrapper here. Well, all three of these things, I need to know how much they cost, right? To understand how much margin I made when I sold this cup of coffee. The example I like to use in this instance, and I use this all the time, is I used to work for a winery, right? And we would go to bottle wine once a year when it was harvest season. And a lot of the time when people think about a winery and pudding, they think of a bottle and a cork, right? Well, that's not necessarily always the case when it comes to it. You have the bottle, you have the label, you have the cork, and then you have the little thing that goes on top to seal it down. All of those products go into the cost basis of what it costs for us to produce a bottle of wine. So if we're selling that bottle of wine for $50 as an example, and the bottle itself cost us $5, the cork cost us $5, and the label cost us $5, we already have a cost basis of $15 for our product. And that's before we've done anything else. We know that we're selling it for $50. The system automatically knows what the margins are associated with that. Why is that so important, Damon? Well, as you start to build products and services out in this manner, and you have an understanding of what your margin and your basis is, a couple of things will start to happen. First of all, you're going to have a product that's more popular than other products out there, right? And as such, you will tend to sell more of that product. That's number one. Number two, you will start to understand what products have bigger margins and are more profitable for your business, which tends to mean you would focus on those areas. Now, the same can't be said for services, but it follows the same model. What does it cost us to provide that service? Whether it's flyers, marketing, advertising, all of these go into establishing what the basis is for providing either the product and or the service. Having a clear understanding of what that basis is means that you can project out from a growth perspective and account for things like inflation and cash flow moving forward. So again, job costing, a big part of what you want to have a clear understanding for your business as you move forward. I like to pause here a second. There does tend to be some questions that come up within job costing. And I want to make sure I'm addressing everyone out there. So I'm just going to pause for a second before we move on to the next slide. No questions? No? Okay. Something in chat.
That was the.
Oh,
very
from
beginning.
earlier? Okay. Okay. Okay, so walking through these processes, as always, I'm actually going to not sit here and type through each little line item to show you. I'm going to talk about it, and then I'm actually going to take you back into QuickBooks and show you an example of this. So at this point in time, we're looking at transaction forms overview. So basically, it's a who scenario of choose the name of the person or business that you're doing business with, like customers, suppliers, or others. When, date of the transaction, service date is another data field. The what of this scenario. Sorry, this screen's. Oops. The what of the scenario is what you're selling or the expense that you're incurring. The how much. The what is what you're selling or the expense that you're incurring. So let's kind of walk through all three of these scenarios within QuickBooks. And I'm going to start with the vendor side of things. Okay, so let's go customers, Bob's Plumber. So I now have Bob established in my system as a vendor, and I have a bill that I need to enter for Bob. Okay, and Bob sends me an email. Inside the email is a nice PDF. Take that PDF, I take a look at it and go, yep, that's the work Bob said he did. So now I'm going to go ahead and enter that bill into the system. Got Bob the plumber as my vendor currently. Now, the nice thing about Bob, and we're going to talk about this, is that Bob gives me terms. He gives me net 30 terms, which is fantastic from my side. And in a second, I'm going to tell you why. And then all that is that we have to do right now is specify the due date, which would be 30 days from the billing date. If there's any billing number associated with the invoice, we're then going to scroll down to our categories here and just designate what it was that Bob actually did. Now, there's a couple of ways we can do about this. In my case, I tend to tag it to professional services, only because that's what I've traditionally used in the past whenever I brought in somebody outside from a contracting perspective to have the work. With that said, that doesn't mean that you have to tag it there. If there's a specific category that you want to be able to track this expense at, this is your opportunity to create that. Well, how do we go about doing that, Damon? Really simple. Just when you saw me search out the legal and professional service, you have the ability to add new here. And from within this, you can go ahead and specify exactly what you're looking to set up. So in my case, it wouldn't be a bank, right? We would be looking at an expense that's associated with this particular event. In this case, the associated would not be advertising, it would be professional services, which is what I want to tag it under. Or repair and maintenance, possibly, since I'm dealing with a plumber. And then I could specify what I wanted it to be. And save and close. Now my vendor is established. I've got a bill. I'm going to punch in the dollar amount. Charge me. Total's going to show up. Here's the nice part about QuickBooks that I just want to spend 2 seconds talking about. We have this lovely paper clip at the bottom here. One of the things that I try to do internally myself is to go as paperless as possible. From a streamlined perspective, make your life a whole lot easier not having to dig through filing cabinets looking for the bill. This is where you're actually able to attach the actual invoice itself to this particular record. That way, if you ever need to come back at a later date and review what took place and why it took place, the actual original bill is already in there, right? Once this is complete, it's simply a matter of us going down to the bottom of the screen and scheduling for payment. That payment will go out if your bank account is linked, will go out at midnight, and then the system will return showing that the payment has been cleared. Yes.
Mary asked if that works for existing vendors as well.
Yes. Yeah, it works for all vendors that are existing in the system, as long as you've got the bank account information set up. Now, the one key aspect that you do need to get from your vendor is that relevant banking account information so that you can set them up within the system. And actually, let me go back. And I'll show you where we add that information, because I don't think I did. Show you where that took place. You're still looking at that. Back to this vendor setup screen that we walked through. You actually proceed down to the bottom here. You'll notice this is where the ACH information is. One point I would like to make here, that mistakes that are made in this particular area, is that the registrations need to match. So one of the things that you will encounter here sometimes that can cause a bit of an issue is if you have this account set up as a business account, i.e. Bob's Plumber, but the banking account information that Bob gave us is Bob's personal account, that can cause issues sometimes where the payments will not clear. And the reason for that is this is how a lot of fraud takes place. So a lot of banks out there will make sure that they will validate both sides of the entries when it comes to this side of the world. Do keep that in mind as you're interacting with your vendors. Also make sure that that's the case when you're dealing with your customers, right? If your customers are paying you electronically, you want to make sure that the registrations match on both sides as well, as it can have an effect on QuickBooks side. Okay. Now that we've got the vendors side of it taken care of, let's spend some time talking about vendors and why it's so important from a cash flow perspective. So as I've stated 30 times so far, cash flow, biggest hurdle you have to overcome when it comes to QuickBooks short-term as it relates to small businesses. How do we go about managing our cash flow so that we know, number one, we're capturing everything? That goes back to our one source of truth. The other part is, how do I know that I have enough money coming in to pay the bills going out? Because that is core, that is what we're talking about when we talk about cash flow. So let's start at the top. Internally, as procedure-wise, I used to work for a rather large solar company. I ran basically a $250 million budget out of QuickBooks. The reason I bring this up is I want to talk about the scalability of QuickBooks, how it can be utilized. Anything that your business has out there, QuickBooks can handle. But the key aspect is making sure that it's set up correctly and that you have the relevant information in there so that it in turn can provide you with correct information. As it relates to cash flow, you're dealing with two worlds primarily. You're dealing with your customers who send you money. You're dealing with your vendors who you send money, right? These two interactions are what generates either a positive or a negative cash flow scenario for you. And staying on top of that cash flow is key. So one of the examples of cash flow monitoring that I would do is every Monday morning when I came into the office, I would run the entire week's AP, accounts payable. What bills do I need to pay between Monday and Sunday, right? And the system in turn, because I've been entering my bills in my vendors, will generate a list for me of all the vendors that are due that week. Let's say that vendor list shows that I need to pay out $5,000. Now I know exactly what my liability is for this period of time. Conversely speaking, I will then go back into QuickBooks and run the same report, but for AR, accounts receivable. Now, accounts receivable are what your customers pay you. I run my AR, and I noticed that this week I'm supposed to receive in $8,500. Great, right? Within 30 minutes of walking into the office, I know that I need to pay $5,000 out this week, and I know that $8,500 are coming in. I have a positive cash flow, right? More money coming in than more money going out. Now, understanding and monitoring this relationship is at its core what we're talking about from a cash flow scenario, right? It also enables you to help grow your company moving forward because you know exactly what cash on hand you have. So my tips for cash flow management are always stay on top of your vendors that are due and always stay on top of your customers that are due. That is your best way to manage cash flow on a weekly basis. With that said, let's talk about the banking side of this. Your customers are making payments to you. Those payments are hitting your bank account. And when you're showing up the next day in work, you find those transactions within the banking section of QuickBooks. Now, the reason I want to spend some time talking about this is going back to that one source of truth that we have talked about, right? And that one source of truth is the bank. One of my recommendations when setting up QuickBooks is not to directly connect third-party credit card processing to QuickBooks, right? And there's a specific reason for this. So if we link our bank account up, and then we link our Square account up, and then we link our Venmo account up, we have 3 points of entry into QuickBooks, which means we need to reconcile at the end of the month all 3 accounts. Trust me when I tell you this can become pretty complicated and make your life a lot harder. There's an easier methodology that can be used to solve for this exact same scenario. Simply link Venmo and Square directly to your bank, not to QuickBooks. Well, what difference does that make, Damon? Well, it actually makes a huge difference, and here's why. Everything that hits the bank will show up the next day in QuickBooks as a transaction. It also means that when we go to reconcile that particular bank account at the end of the month, we only have to reconcile 1 account because everything is hitting the bank and then it's hitting QuickBooks, as opposed to 2 of the accounts hitting QuickBooks directly and the 3rd one hitting the bank. Again, the choice is yours in the way that you want to go about it. This is simply my recommendation to make it easier for you to close out your month, close out periods, and more importantly, reconcile your books. Okay? So, why is it so important to get it down to 1 account, Damon? Well, when we go to reconcile the account at the end of the month, we only have to deal with 1 account. And the only requirement that QuickBooks has is it wants to know what that balance is. We simply produce the statement from the bank, we plug in the balance that's on the statement, and the system will then automatically go through and reconcile all the transactions associated with that bank account. If we have the Square and the Venmo linked directly, we will have to repeat that process 2 more times for those other accounts. So again, just from an understanding perspective, it is significantly better to have your third parties process directly through the bank and then map over into QuickBooks. The other part about this is if you go through this methodology, you will always tie back to the bank to the penny, okay? I spend a lot of time with people going over the credit card processing, where the transaction should be, how it should be hit, where if you utilize this simple process, it makes life that much easier moving forward. Again, the choice is yours in the way that you choose to go ahead and set it up. This is simply my recommendation. Piggybacking off that, one of the key areas once you have the bank linked up is monitoring the banking transactions as they hit your specific account. The reason I bring this up is you should be doing this at least once a week, right? And the reason for this is really quite common sense if you ask me. You'll have working knowledge of what's taking place within your business today, yesterday, the day before. But wait 2 weeks out and see a transaction and then try correlate it with exactly what's taking place. It's that much more work. The other part is it'll take you 30 minutes on every Friday to go ahead and tag these to the correct category codes. Where if you wait till the end of the month, you're going to be spending 4 hours digging back on entries to figure out what should be tagged and where it should be tagged to. I want to stop there for a moment because I brought up the word tagging, and I want to make sure that everyone clearly understands what that means as it relates to the chart of accounts, as we've talked about this, and category coding, right? So let's take a quick look at what that actually means to you. So when I talk about tagging against specific line items, I am talking about tagging against the line items that are associated within the chart of accounts, right? And the reason I bring this back to circle back to the expense side is the ability to track specific expenses at specific levels. Now you have these primary accounts within the chart of accounts that are able to track against specific line items. So as an example here, let's just take a look at the one at the top of the list right here, which is your advertising and marketing. Right? So any expense that's coming in that I see hit the bank account that's associated with advertising and marketing, this is where it's going to hit, right? And the way I want you to think about it is this is anything that goes to promote the business. So this could be anything from media print through to LinkedIn, Facebook, Instagram, anything that you're using to promote and push out, right? We want to capture it. We want to category code it towards advertising and promotion. Okay, so let's talk about why that's important. We spend this entire year tagging to this particular line item. Come December, we're building out a new budget for what? For the following year. What? How much are we going to put as a line item in for advertising and promotion? I know what we can do. We can go back and look at this year and see how much we spent over 11 months and know that we're probably going to have 15% growth. And voila, we just created a budget line item for ourselves. Not only do we know how much we should be spending, we've built in a buffer of 15%. Now, when we go to put the budget in the system and we run budget versus actuals, the system is telling us we are on track with our budget. We are not overspending. We are not underspending. This is how we build a budget as it relates to your business. Know that it's accurate and keep you on track moving forward. Seems really, really simple, right? But it's the core element of what we're talking about when it comes to tracking on the expense side, okay? Let's take it a step further. Let's say that somebody, Owen, comes to me and goes, you know, Damon, we've got this advertising and market line item and it works really, really well for me, but we're actually going to do a promo this quarter, right? And all the expenses for this particular promo, I want to capture it separate from advertising promotions. I want it to have a sub-account that I can tag against, that when we get to the end of the year, I can know how much these special projects cost, right? This is where we are able to go in and actually create sub-accounts in QuickBooks. Too far there. And I'm going to show you exactly what that looks like. Where is my advertising? Going to make it even easier and just do it as a and then we decided it was going to be expense, select advertising and marketing, the account name, the account description. There's the sub. Interesting. Okay, and so now I've created another line item for Owen under the same detail type, but all I've done is name that promotional. So now if he was to run a report under advertising, he would see two line items. One would be the advertising and marketing line item, and the next would be the promotional that he is currently working on. The point that I'm trying to make here is your ability to track expenses at a granular detail if you choose to. So one of the things that comes up internally here at the hothouse quite a bit is product development and what product development looks like. We have a number of startup companies that start here, and one of the first things they start working on is product development, but they really want to capture all the expenses associated with what it is costing them to actually build this product. That would be an example of drilling down on these line items so you create the granular detail. As an example, I could actually create another line item in here and call it Facebook promotions. I could do another line item and call it LinkedIn promotions. That way we would be able to track specifically what we're spending at each different entity out there. Conversely speaking, you could then take the detail that comes out of these systems, i.e. Facebook, Instagram, and see what contact points you're making along the way, how many individuals are interacting with, and have a tangible idea of what is actually taking place. Again, the point I'm simply trying to convey here is your ability to drill down and track those expenses at a line item detailed perspective. Everybody good with that right now? Threw a whole lot at you in a really short period of time. Question?
I know when you're categorizing, when you're categorizing, you can put the line item and the sub account, but then you can also put like a tag, a separate tag, like just type something in.
Yes.
What can you do with those longer term?
tags?
Yeah, can you
So
run
the
reports with
tags
those?
will actually show up on the reporting.
Okay,
So, and then let's spend some time talking about the reporting because it's actually a really, really good deal. So, taglines are notes or memos that can be added in that will be reflective of when you do the reporting. When you actually generate a report, those line items will be on there, so you don't have to necessarily go back. Now, just to make sure, we're not talking category coding per se, we're talking tags specifically, right? And so the reason that that can be reporting, if you're running a consolidated reporting, those tags will actually show up on the consolidated reporting along with the drill down. So you can see those different levels of reporting within QuickBooks, just depends on how you set it up.
so if you want to get even more specific, it's worth putting those in.
Oh, definitely. And if you really, really want to track expenses at the most granular, this is the manner by which you will go about it, to be quite honest with you. And so let's spend some time talking about reporting because it's actually one of my favorite aspects of QuickBooks is the reporting side of things. I'm going to talk about the two worlds though. So I've been teaching QuickBooks for 27 years now. I'm a desktop fan. QuickBooks Online has been around for a while now. I get it. And I'm sitting here teaching you QuickBooks Online. I'm a desktop fan, okay? With that said, there's plenty that QuickBooks Online can do, and there's also plenty that it can't do. And one of the areas that it's good at but not great is the reporting side, okay? And the reason I bring this up now is twofold. Number one, if you know that you are going to be doing things like cash forecasting, cash projections, and are going to use QuickBooks in some form or manner at a future date to seek investment in your company, then I'm going to recommend that you use the desktop version. Now you can migrate the online version to the desktop. Conversely, you can do the reverse. You can go the desktop to the online. The reason for this is while the online version does do a good job from a reporting perspective of generating specific report, it is not as robust as the desktop version. And when it comes to finances, and more importantly, when it comes to getting investment in your business, the very first thing an investor is going to want to look at is your finances, right? It's one of the reasons I spend so much time in my first class going over getting QuickBooks set up correctly. Because at the core end of the day, it's garbage in and garbage out when it comes to QuickBooks. So if things are not set up correctly, if things are not being tracked correctly, then all the information coming out of QuickBooks is not going to be relevant to what's taking place with you. Now, the nice part about the reporting process within QuickBooks is that you can pretty much generate any report that you want based on any specific requirements that you have. The part about this that I like the most is that you actually have access to any report that anyone has ever generated in QuickBooks. And I'm talking thousands upon thousands upon thousands of templates that are out there that you are able to take and just mimic over into your QuickBooks and run the financial detail, right? Now, the reason I bring this up is, trust me when I tell you, you're going to be looking for a specific report, whether it relates to sales taxes or your vendors or your 1099 reporting. Somebody else has already created it, right? All you just need to do is find that report. The system will then populate it with your information. What's nice about that is you can then save it. You can actually automate it where the system will automatically send you that report on a specific day. So as an example, and this is just circling back to my discussion before, remember how I talked about the fact that I'd go into the office first thing Monday morning, run AP, run AR so I can see where my cash flow is? Guess what I didn't do every Monday morning? I didn't go in and run AR. I didn't go in and run AP. Do you know why? They were waiting for me in my inbox when I got into work on Monday morning. It was simply a matter of me clicking on them, seeing what the report detail was, and then presenting it to my CFO. simple little processes that you can put in place to streamline your cash flow and understand exactly where you are and what's taking place. Question?
And when you're talking about reporting, you're just talking about like ways to automate, get sent the information?
Yeah, not only ways to automate, but, okay. Reporting, the reporting gives you so many tools that you don't even realize, okay? So let's talk about a great example of tools. Camera's on me, right? Okay. So worked for a really big solar company, $100 million budget each year because we basically build solar arrays, right? Huge products, average project price is $26 million, roughly, right? Here's what I discovered in this process, right? Specifically with vendors. At the end of each year, I would report to my vendors. And I see exactly how much money I spent. Okay? Now, anyone that I had spent 50K up, I would call and said, I spent 50K with you last year. I'm probably gonna spend 75K with you next year. I'll take a 50% reduction on all my costs moving forward if you want my business still. Okay? I'm not joking, right? I've got proof that they know I spent 50K. Trust me, they can run the numbers, right? And I know that with the growth I'm gonna have, I'm probably gonna spend an extra 15% on top of that. So asking them for a 15% discount is not much. Guess what that vendor is going to say 9 times out of 10? Sure, love you. Want to keep your business, I'm going to give you that 15% discount. That's what you just did. You just probably saved yourself $10,000 to $15,000. Now take that, repeat it with every vendor you don't. Break them out into thresholds. You know how much you're spending with them. They know how much you're spending with them, which gives you leverage. Leverage creates opportunity for you to save money. Okay? So now we've got this discount. Great. So we're saving money. So that's number one. Okay. Number two is something that we touched on at the beginning of this, and I keep bringing this up, and you're going to get sick and tired of hearing it. Cash flow. Right? What dictates, what has the biggest impact on your cash flow as it relates to an expense side? Is terms. Okay. What does that mean to you and your business? Talk about it. I'm selling this mouse right here, right? I buy all the pieces that make up this mouse and I sell it to my customer for $30. That customer has to pay me in 15 minutes if he has net 15 first. Right? The people that I bought all of those pieces to put the mouse together, right? The parts. They gave me net 30 to pay them back. Right? And I need to pay them the $11 for all the parts it costs to put that together. I have a question for you guys. Why is that so significant? Who's going to get money first? The vendor or me? Right? This guy's got to pay me in 15 days for that mouse that I just sold. When am I supposed to pay the vendor? 30 days. Yeah. So, am I out of pocket? No. Let me tell you what's not taking place with most of you out there. Yes. In fact, it's the exact opposite. And you're going, wow, how different would my cash flow look if we had this kind of relationship, right? When do you get to start asking for these terms from this vendor? You want to know? After 90 days, guys, you know what you get. You wake up before. You see how much you would spend for the thing you go back. Okay? This gives you control of your cash flow. This gives you more control of your cash flow. This is a positive cash flow scenario. On top of everything else that we've already talked about. People don't think about this part though, specifically the accountants. Right? This is what impacts you more than pretty much anything out there. Right? So if we can get these terms improved, even a little bit, even 10 days, has a significant impact on your cash flow. Right? Because you're not out of pocket constantly. And I mean, let's be honest here. I'm not lying when I say this, right? I see the looks on all your faces because you're going, oh yeah, for absolutely, right? Because we've all lived it. but we don't know how to make change within it. Something as simple as just changing the terms that we have with our vendor, right? And again, after 90 days, they see you're paying on time, they're going to be willing to give you terms. Now, here's how it works, right? They might only give you 10 days. You know, you quarter, you know what you did? And you go, did you pay days? Another 2 days. Okay? This is about managing relationships, right? Business at its core is all about managing relationships. Relationships with your customers, relationships with your vendors, relationships with everybody else. Have this relationship. Ask them questions, right? The only way you're going to be able to manage it is if you have a clear understanding of what this looks like. Okay? Conversely speaking, once you have this, it creates leverage. Leverage to manage your cash flow, leverage with your vendors, leverage with your customers, right? Which enables you to grow. Good? Yeah. And all of this is starting to tie back, right? Because how did I come up with a lot of the $11? Oh, cost basis. I figured out exactly what it cost me to produce that product. So now I have that cost, so I know what my margins are. I'm not selling it to my customers at, 3 times the cost of what it cost me to make it. He has 15 days to pay me. I have positive cash flows in order to come in. If they ever would see my writing on the wall. Make sense? Okay. And conversely speaking, all tied back to a report. Reporting can tell you anything you need to know, from tax liability to the vendors you're interacting with, all of it. Okay? Take the time. Take the time to be the expert as it relates to your business and what you're doing. Pause there a second before I come back into our slide deck. Questions, comments? I bounced around quite a bit there. I want to see if anybody has any questions in regards to what we talked about.
This might be like slightly more a specific question to my startup, but it has to do with the product development costs. So when you're developing a product and you don't know exactly what the bill of materials will look like and like we don't know there's going to be 5 parts and it'll all cost this much.
Mhm.
And it's kind of like the innovative process of product development. Should we be like, I'm assuming we want to just be as lean and like spend as little money as possible, but I also don't want us to like underestimate what it's going to cost. So do you have any tips? Like, should we be reviewing this more often or like?
So a couple of thoughts here. There's a difference between being lean and being cheap in this world. Okay, there's nothing wrong with being lean. Don't be cheap, is what I would say. First of all, you need the tools to do the job. Number one, right? You have the tools to do the job, then you're putting yourself in a position to be successful moving forward. That's being lean. That's not being cheap. Cheap is where you want the work done, but you're not willing to pay for the tools to get the work done. Okay, so be lean, but don't be cheap. Yes, to answer your question. Okay. You want really what you want is your COGS here. And specifically when I'm talking about you, and just for people that don't know the word COGS, it's cost of goods sold. You want to really have exactly what that looks like for you and your business. What is it taking and what is it costing me to put this product together? And that includes things like, and we haven't touched on this and there's specific reasons for it, but that does include labor as well associated with that product. I mean, we talked about cost basis earlier. That was really component based, right? But that doesn't account for the labor side of things. That is something that we do need to factor in as well. But really have an understanding of what it's costing you to put that product together. And conversely speaking, I mean, like, I will tell you some of the things that I've done is like, I've built out cost basis for people on a Google Sheet and linked that Google Sheet up to Google and had Google go out each week and just search for those products and come up with better prices. And it will do it for you. You literally just need to log in and look at it. And it goes, last week it was $27 for that part, and now it's $23. Well, shoot, let's order. So constantly staying on top of what those components are costing you, where they're coming from, how long it's going to take it, because this actually becomes a part of it. And we actually start to lean towards an inventory system that QuickBooks does have, just so and the reason for this becomes a little bit more technical, but I'll explain it out really quickly. So QuickBooks has 2 additional modules that you can add on. It has a whole lot more, but the 2 most common ones are payroll module, big fan, okay, and the inventory control system. So I'll touch on both really quickly. The payroll system is just that. QuickBooks handles all your payroll for you internally. Not only does it handle the reporting for both bank, the state, and the federal, but it also assumes the liability for you, which is huge, okay? So should the IRS or the BOE have any issues with your reporting, they actually deal with Intuit, not you, which is a huge plus for you. That's number one. Number two, it's a huge plus. One of the things that I encountered working with small businesses and QuickBooks in general is the amount of time people spend on processing payroll. And it tends to be the most important person at the company that's doing it as well, which is normally the owner, whose time is more valuable than literally anybody else's out there. So it just doesn't make sense to be spending time doing payroll when for a very small fee, you don't have to worry about the liability. Everything is processed out. Now, obviously, depending on the size of your company, that can have an impact. But the point I'm trying to make is I am a big fan. If you have anything more than 3 people working for your business, I'm a huge fan of the payroll module. That's number one. Number two, QuickBooks does have an amazing inventory control system. Okay. And most people think inventory and control, they actually just think of products being available to sell, right? That's not entirely the way that the inventory control system works within QuickBooks. And the reason I bring this up is it can relate to different businesses if they understand what that inventory control system looks like. So most people in their mind think inventory control system, they think like a winery, right? Where we've got these inventory control systems and it says we've got, 5,000 bottles of red wine, 5,000 bottles of white wine. Somebody places an order for 5 bottles of white and the system will thus reduce it by 5 bottles. That's great. That's what a traditional inventory system looks like. That's what a traditional inventory system works like. QuickBooks have taken it a step further, right? What they've done within their inventory control system is something I actually touched on at the beginning of this conversation, which is more associated with the cost basis of actually putting that product together. Well, what do you mean by that, Damon? Let me give you an example. So a lot of the time when, and I'm going to use the winery as an example again, a lot of the time when a winery goes to bottle, they can only bottle what they have on hand. So as a wholesaler comes in, he goes, I'd like to buy 500 bottles of wine for you. Great. The most important part is having the wine, right? But we kind of need something else as well to be able to bottle the wine. We need bottles, right? So if this particular wholesaler called in and he wants 500 bottles, I can go into the system, type in 500 bottles of Pinot Noir, and the system is going to come right back and go, first of all, we only have 200 bottles of Pinot Noir, right? And we only have the components, the cork, the bottle, and the label to put together another 200. So we will only be able to fill your order up until 400 bottles. So the system actually knew 2 things that are really important here. It knew what we had on hand, but it also knew how many pieces of the components we had to make the additional bottles. That aspect right there at its core is a huge deal from an inventory control system, because not only are we just having inventory that's ready to sell, the system actually has the ability to tell, we've got all of these components to put this together, right? I'll use another example that might be a little bit simpler. So NeoCharge is a company that came through the hothouse. They were an accelerator team. They developed a smart charger for Tesla cars, which enabled you to plug it into your garage and not have to buy Tesla's charger. It's a $400 component. It's amazing, absolutely amazing. Great job. They've been 4 years now. They're doing over $2 million. And they're doing great. But when they first came to me, they had this box and they had like 9 different components. Half of them came from China. Half of them came from South America. And their issue was all 9 pieces had to be there to put the box together. So they would get these orders in all the time and they could never fill the orders because they never understood how many they had of all of those 9 components to put it together. I recommended they use QuickBooks Inventory Control System. So they started to use QuickBooks Inventory Control System and would know what they have on hand ready to ship out, what they have components-wise to put together to fill the order. More importantly, what their pipeline looked at down the line from a forecasting perspective to have that on hand, right? Because now we're talking about projections, and this relates to any part of business that we're talking about, whether it's a service or whether it's a product. We're talking the same thing. but understanding what that looks like and how that interacts with your business, right, on a daily basis is key. So I do want to keep everyone to keep that in mind, that again, when I talk inventory control, it's not just putting it on the shelf and taking off the shelf. It actually goes back to that cost base and that component perspective to understand what does it take to actually provide that product and service to a customer.
Kind of like a ERP.
Exactly, like an ERP system. That's exactly what it is. And all they've done is they've just overlaid it with the financial, and it, obviously, when you start to think about it, it makes complete sense, right? Because now we have the cost basis for each one of those products that I'm selling. I know how many I can put together. I know what I need to order. I know when it's going to be delivered, and I can let my customer know. Here's the thing about customers. They understand that we're going to encounter issues and that I can't fill that $500 bottle order. But what I can tell them is, I'm going to have your 400 to you next week. 2 weeks from now, I'll have the other 100. And you know where he's going to go? No problem. Where as opposed to me going to him and going, I've only got 200 bottles on hand. I have no idea when the rest are coming in. You know what he's going to say? I'll go find somebody else to buy from. Okay? It seems really small to you and me. Trust me, it's not in the industry that we work in. And it doesn't matter what we're talking about. Man, I keep wanting to walk through these slides, but I love the interaction. So we did sales, we've done customers. Okay, we want to get to the products and service list we talked about. Let's talk about sales receipts and receiving payments in QuickBooks real quick. So most individuals out there right now generating the service of the product, sending an invoice off to the customer, payments coming in to the bank, processing a sales receipt against the invoice, right, to close it out. One thing I want us all to keep in mind, right? There's 3 different ways that we receive payments in right now. We have the traditional method, which is the good old-fashioned check, which we have to take down to the bank, right, and deposit in or take a picture of. That's one. Number 2, we still deal with cash to a certain degree. And then we have credit cards. Credit cards by far the easiest process. Hits our bank, one source of truth shows up in our banking, we process it out. Sales receipts themselves, slightly different. We don't necessarily have to have an invoice established against it, right? But we can tag against a specific line item or category code, right? The difference between a sales receipt as opposed to a traditional invoice is it will still track the payment coming in at the line item, right? So you'll know exactly what is being paid for by category. The only difference between it is sometimes the customer doesn't have an invoice associated with it, okay? And this is specific more to services, not products that you encounter with us. So a lot of people like lawyers, attorneys that are providing time-based services will use their sales receipt. Okay? Slightly different, right? Only thing you need to think about in your mind's eye is it's exactly the same as long as it's set up the same from a sales receipt perspective. Most, you might use this, I'm thinking of more so than you would, right? Because you're a service size, right? Where you're a product-based individual, slightly different. So you and I should probably spend some time and talk about sales receipt because I actually do think it will help you out moving forward. The other part about sales receipts that I do like is that they can be used for credit card processing in the same manner, right? So a lot of sales receipts are tagged against those Venmo transactions because that's literally what it hits Venmo, hits the bank account, then shows up in QuickBooks. And you can actually see it right here. Make the deposit, invoice, receive payment, bank deposit. So those are your 2 different flows that we have basically within QuickBooks. I'm trying to think if there's any other options out there workflows wise. Don't go through that. We should probably talk about the banking side real quick and the deposit of funds and the undeposited funds. So this is if we're talking about checks and or cash at the bank, okay? My recommendation for when it comes to dealing with cash or checks is that you do a deposit once a week, okay? There's a very specific reason for this. It goes back to when we reconcile, and then keep hearing me bring up that word because I love reconciling things. It means that they're accurate and we're on top of it. But When it comes to reconciling, you're basically looking back at what took place at the bank. If you do your deposits once a week on a Friday, right? When it comes to the end of the month and tying back to the statement in QuickBooks, you will only have 4 entries at the bank. You have to type out the 4 Fridays that you do your deposits. Let's say you do deposit every day. When you go to reconcile your QuickBooks, you're going to have 20 days that you will have to reconcile as opposed to 4. So again, from a reporting perspective, from a flow processing, if you physically need to do deposits, do them 1 day a week, be consistent, it will make your life that much easier. A lot of what QuickBooks is procedures. Setting up procedures, repeating those procedures, and setting up more procedures. The more you do, the more structure you'll create, right? And the easier it will be to stay on top of it. Here's where people get in trouble with QuickBooks. I got it set up. Everything's in there. Turn my computer off. I don't look at it for 3 weeks. And then I come back and I go, oh my gosh, what happened? How'd that get, wait, that's not going to work in QuickBooks, okay? This is your truth. You should be reviewing it daily. You should be reconciling it monthly. You should be clearing your deposits once a week at a minimum. And your follow-up needs to be in that manner check. Okay? Question?
If you do your deposits once a week, wouldn't that make it harder to distinguish what they are when you're categorizing them?
No, because they're grossed together.
So
You don't care about the categorizing when you reconcile at all. It's just going to show what the total deposit was on that day. And here, let's talk it through. Okay. So you go down to the bank, today's Thursday, tomorrow, and you do the deposit. Right? What's going to happen to that deposit? Walk me through. Where does it show up?
it'll take days weekend.
Correct. In QuickBooks, exactly right. And so you'll have $1 amount, right? And so when you go to look at your bank statement, what's the bank statement going to show you?
So if the deposits are for the same type of thing, then
It's going to correlate.
But if, say you got like, I don't know, a random investment check and you also got money from a customer, would you still want to do them the same?
Because we're doing it by day. And day is total, it doesn't matter. So if we have 13 different checks for 13 different categories, right? What are you gonna get at the bottom? One number. And what are you gonna have at the bank? One number. And those numbers should always stop, right? And that's why those four, I hear what you're saying, but we don't care about category when we're looking at it from a reconciling. All we care about is dollar amount. That's why going in each Friday or going in each day and making it exercise of categorizing everything, it just makes your life that much easier. It's easy to go in and go, oh yeah, we bought supplies and materials for the office today, category code done. Wait 3 weeks later and go, God, what did we get that for again? So it comes down to being repeatable, being diligent, and taking the time to stay on top of it. The thing about QuickBooks is once it's up and running and you've got it, it's not that hard. You just need to put in a little bit of work each day, each week to stay on top of it. And that's where people kind of get separated from QuickBooks, is they wait periods of time and then they come back. Or the big one out there is, and you guys have heard me say this 1,000 times, and I'll say it to everyone else out there, the biggest mistake that small businesses make when they first start is, tell me, not capturing what? Expenses. The number one thing that businesses do out there when they start up is they don't capture expenses, because here's what you guys do. We go, yeah, I don't want the business to take that expense. No, I'm going to take that expense. Do you know who you're doing a disservice to? Your business, right? How do we end up with revenue, guys? Income minus what? Thank you very much. So when we don't do that, who are we shortchanging? The business. Who is going to end up paying more taxes at the end of the year? The business. Right? And who's the business? You. It's your business. So this is the mentality that people have, right? Is that, no, I don't want to. Don't make this mistake. Capture your expenses. Ensure that you're capturing everything, right? And so this is where we actually go back to the bank again, right? How do I make sure that I'm capturing everything, Damon? And that it's not personal. Keep your business and your personal separate. I want a big black line right down the middle that keeps those two worlds separate. If you remember when you started here, and I'll convey this out to everyone else out there, the very first thing I asked you to do is go down to the bank and open a business card, right? Business card, personal card. When I walk out the door and I'm doing something business, business. When I'm doing something personal, personal. At the end of the month, every single one of those transactions is in QuickBooks. We tie it back to the bank account, and I know I've captured all my expenses. Even that parking meter down there, or driving out to meet a client in Santa Maria, those are business expenses. 61 cents a mile, guys, right? The only expense you don't get to capture is the drive to work. Everything after you get there that you do for your business is an expense. Whether it's that lunch meeting, whether it's that drive, whether it's that class you had to take, all are business expenses. All need to be captured for you to really understand where your business is at. And this is something that people really struggle with. They do, because they actually perceive that they're doing the business a disservice. The only person you're doing a disservice is yourself. Because here's how this plays out. Not only do you increase the tax liability associated because you're not claiming all the expenses, guess what happens when we go to create a real budget? It's not accurate because we didn't capture everything because we're not doing it right. So, and I just want to pause for a second here and just say one thing, because this is the question that arises every time I have this conversation with people. And I'm just going to use Bob's Plumber as an example. Bob's Plumber loves to run every expense that exists in this world through his business, including his personal, okay? That is his right to do that. I'm not recommending that you do that, but it's his right to do that. Is that the right way to run a business? No, it is not. Are you allowed to do that? Yeah, you can document it and prove it. You absolutely are. That's not what I'm trying to teach you here. What I am trying to teach you is keep your business and your personal expenses separate. Make sure that it's just your business expenses hitting, so you have a picture of what's taking place with your business from a financial. When you end the year, you know that what is in there only relates to their business. That is the way to grow and build a successful business moving forward. It's not by tagging everything that you do personally and professionally to it. Do people do it? Of course they do, all the time, okay? I'm not recommending that, and I wanna make that perfectly clear. We do things the right way to get the right results, okay? That's it, that's the way we work. So I put the disclosure out there, we all know. Now, am I saying don't take advantage of running your own business? No, not at all, absolutely. You work hard, you probably have the hardest job in the country is running your own business. So take advantage of it, but do it smart and do it the right way. Okay, that's all I'm saying in this regard. Yeah, because this question comes up every single time when it comes to expenses and writing things off. Just be smart. And the most important thing that I will tell you, and I've been through more audits than I can even remember, here's what the IRS and the BOE want to see. They want consistency. That is their number one prerequisite, is consistency. If all of a sudden they start shooting charges and expenses that show up that weren't there in the past, this is what creates these red and yellow flags for them. You get enough red and yellow flags, and they're coming to give you a notice. It's as simple as that. So be consistent, be smart, and be honest, is what I say. Man, you guys got me pivoting all over the place today. I'm not going to walk. I've done the receivables. We talked about receivables already. You guys got to throw some more stuff at me. Suppliers and expenses for through suppliers. So now you guys see why I talk through things instead of just sitting here putting them up on the screen. We did pay bills already. We did suppliers. But I feel like there was the last thing I want you to get through. Accounts payable I did with you guys. I'm going to pause for a second. Are there any other questions that have come up so far?
Not
Oh, great. Yes.
So we touched very briefly on reports, and you said that the online version isn't as good at the reports.
It is not.
Is there, can we still do the automated reports too?
You can still do the automated reporting, but you can't do any advanced reporting within online. And what do I mean by advanced reporting? You do have the ability, within the desktop version, you can customize it to do whatever you want from a reporting perspective. You're a little bit more limited within the QuickBooks Online to doing that. And the only time I really recommend switching back to the desktop is if you are going to use QuickBooks from a financial investment perspective, right? Because if you are going to use, you need to set it up, and it's way easier to do on the desktop version than it is on the online version. The other part about it is as you start to go down that avenue, there are more tools that are available on the desktop side as opposed to the desktop.
So why would we not all use desktop? Is it just more expensive?
So let's ask that question. So a lady out there that's running a plant store right now, and she has for the last 20 years, she's not going to be looking for any investment. There's probably not anybody that's going to come and go, oh, I want to, buy your store. Can I look at your financials? So in her case, I would say that the online version works real fine. Now, if I'm talking about a startup that just started less than 2 years ago, that is going to be looking for investment over the next 24 to 36 months, I would highly recommend switching over to desktops to the degree that the teams that are out there now, the Flumes, the NeoCharge, and the Euros, all use desktop. Because they are going after investment, they are going after dollars, and the very first thing they want to see is your financials. Right? And so you're able to produce them when you have the desktop. Not that you couldn't on the online version, just so we're clear, because I have done it, but it is a lot of data manipulation, pulling it out, dropping it into Excel, manipulating around. With the desktop version, we just do it for you.
Is it considerably more expensive?
No. It's not considerably more expensive. It's just a little bit more expensive. I actually haven't even looked at the pricing in the last 2 years. This does come up every year. And I just want to be clear, I'm a big fan of QuickBooks Online. I really, really am. It's just a very slimmed down version of the desktop. And if I'm someone that is used to working on the desktop for a very, very, very long time. Yes. So with that said, let's talk about a couple of other categories. I'm not going to touch on foreign currencies with you guys because invariably it does come up. The charter accounts we talked about. And if I'm flying through something that you guys topic-wise feel I haven't touched on, please let me know, because I am just about to get into a different section here, and I want to make sure that they're all okay. So let's talk about this. Okay, the one other area that I do want to spend some time on today is the balance sheet. So the balance sheet is basically a snapshot of your entire business, right? From both a receivables and a payable, and all assets that are currently held. In most cases, when everyone's coming to talk to you about their business, this is one of the first areas that they're going to want to take a look at. So I just want to make sure that I'm not going to spend too much time on here, but I do want to make sure that everyone has a clear understanding of what their balance sheet is and how it relates to them. Some of it is self-explanatory, right? Bank accounts are just that. They're the bank accounts that you currently have linked up within QuickBooks. Your accounts receivable are just that. Those are your customers out there that you have invoiced and are expecting to receive payments in. Current assets. Okay, let's talk about assets as a whole, because one of the things that does come into play here is whether we want to set our assets up within the system so that over a period of time we can amortize them, right? So I traditionally personally have a threshold of $500. Anything over $500 that I expense, I create as an asset. That benchmark for you is absolutely up to you. It doesn't need to be $500, it would be $5,000. Do note that when you go and amortize an asset over a period of time, you're basically writing that asset off against the business. I traditionally use a 3 to 5 year schedule when it comes to my assets. I'm getting a little technical for you guys, for the people that know what I'm talking about. We can spend some more time talking about this, right? Then we have fixed assets, which are depreciable assets owned by the company. Now, one of the areas here that I like to spend the time is this is where things like cars, larger assets come into play, machinery. Having worked at a winery, we have a number of fixed assets that we would have in there from a processing standpoint that we would amortize over time and depreciate. Keep that in mind as well. That is considered an expense to the business, right? So we talk about making sure that we're capturing all those expenses so that we have them as an offset. This would be another example of that. So the most common one out there that I encountered that I can give you guys an example is laptops. So I have a 3-year cycle here at the hot house. Everyone gets a new laptop every 3 years, and I depreciate them over 3 years, and then I leave. Right? That way I'm staying ahead of technology. We all have a schedule that we follow. I'm allowed to claim the expense against the laptop, right? For those 3 years, at the end of it, it's zero value, right? So I can either donate it or keep using it until it's no longer any good. Things to think about: expenses, offset, track. Okay. Other assets. So that's anything else that doesn't fall into those two categories. An example might be, you know, large machinery, anything that falls out the traditional. Gosh, I really can't give you a specific example, but anything that would not be within the business realm traditionally or under current assets. So, one of the guys that I worked with, he would drive. He had an RV that he would drive from farm to farm doing whenever they did the wineries, the bottling of it. And so that was his other business asset that he would ride off depending on the mileage because he used to transport himself and sleep there. He'd work. And so that's one of the more uncommon ones that I've come across. But again, these are just examples I'm trying to get you an understanding of what it reflects. Accounts payable. We all know what's accounts payable. It's what you need to pay to the people providing you a service or a product, right? Really, really important, guys. Nothing will affect your business credit more than not paying your vendors on time. And yes, your vendors have credit. It's called Dun & Bradstreet. It's a credit reporting geared towards vendors. And if you don't pay, they'll report you, which affects your ability to get terms with your vendors moving forward. Keep that in mind. You can't make a payment on time. Do you know what you do? You pick up the phone and you call your vendor and you go, I'm not paying on time, but I'm going to pay. Do you know why? He's not reporting you. Okay. And again, guys, these things happen very specifically and they can have a dynamic impact on your business and how you operate. Credit cards. Credit cards are credit cards, right? Once a month, process it through, bill payment, track the expense, category coding, pretty straightforward. Current liabilities. So the biggest one here is going to be payroll, right? It tends to be the biggest line item when it comes to liabilities with business, and then our vendors, right? Kind of fall in line behind what takes place. Long-term liabilities. Now, this can be anything from mortgages to long-term loans to even grants associated with a particular project that you have and how it's being tracked. Right? Again, all can be set up within the system to track against. But more importantly, I just want you to have an understanding of what it reflects on your balance sheet. A lot of you will not have some of these items on there. Okay? Just to be clear. Any questions? Flying through today. Let's talk about profit. Okay, so one of the best reports that you can generate out of QuickBooks is the profit and loss report. Okay. The profit and loss report is just that. It's a real reflection, a real-time reflection of where your business is in regards to positive cash flow or negative cash flow. So a couple of things that it takes into account when we're looking at the profit and loss. It's going to take a look at your income. So it's going to take a look at the AR coming in, accounts receivables, customers that you have sent invoices to that you're expecting payments from. It's going to look at income, accounts receivable, expenses, which are any expenses, not just vendor-related expenses. It's also going to track other expenses. This could be corporate tax, retirement, profit sharing. This is where some of these other more advanced services come into play, right? And basically what it's going to do is it's going to calculate the total liability associated with that to show you exactly where you're at. Lastly, but not leastly, it's going to touch on something that we've already spoken about, which is your cost of goods and materials. Right? It's going to go and look at what you've expensed out there and what you currently have to generate this report. This is probably the most common report that's generated in QuickBooks, right? Is the profit and loss, because it gives you a clear snapshot of where you are actually at today, right? So between the balance sheet and the profit and loss, it actually paints a very clear picture of what you've done and where you're at. Yeah.
This is going back to the
vendors. So when you're setting up with any vendor whatsoever, any person you're paying money to, do you need to clarify the terms then? Like if it's, like, say you owe somebody something, like, does it need to be in writing, whether that's like tomorrow or like within 10 days, like?
So great question. Here's what I recommend. When it comes to a vendor, have a vendor form that you send out to them, just like your customers. Have a form, guys. If you want the interaction to be, I get all the information, I enter in the system, I move forward, have a form. If you want the interaction to be, I'm gonna have to call you 3 times, get 6 emails, and then I'll have you set up, don't have a form. But that's what it comes down to, right? And specifically in your case, Owen, talking about where you're talking to, yeah, ask for terms with your vendors. Do you know what they're gonna want to give you? Right? Of course they are. They want their money now. But when you turn around and say, you know what, I actually have net 30 with the other vendor. Can I get that with you as well? Oh no, you know what? Okay, I think I'm gonna go back to the other vendor. Oh, you're willing to give me the net? Oh, great. I'll give you my business then. Okay, this is how the game's played, guys. And so when you first start out and you're calling that vendor for the first time, guess what he's not gonna give you? Terms. Guess what you're still gonna ask for? Because a month later, you're gonna call him back and go, you said no, it's a month later, I paid you a bill, give me net 10. And he's gonna go, what the hell are you talking about? Right? But I've already shown you what giving you net 10 can do to your cash flow, guys. It's worth the call. It is. It really, really is. And I would wait a quarter before you go back to these guys, but wait a quarter and then go back. You know what I mean? And so once you get to a point where you're actually spending real money as it relates to these people, it creates leverage for you. You're the boss, right? You have all the information at hand. Make sense?
Yeah. I think so.
No, keep coming. Keep the thought process
So-
going.
If you pay, if like somebody pays,
Do something.
like an employee, say like, or like a co-founder or something, like say somebody covers something personally. Is there like, should there be terms on that? Like, no? Okay,
There's only terms with them.
okay, okay.
You are an individual. So let's talk through Owen's scenario real quick, just so we can play that. Okay? Owen's asking me how we would handle a scenario whereby an employee incurred a cost, right? And we need to reimburse that employee. Okay? So 2 things here. First of all, we would establish that employee as a vendor. Why not run him through payroll? Anyone know the answer?
Why not? What's it?
Why not run it through payroll? Taxes is the answer. Okay? You run anything through payroll, you have to deal with payroll taxes. We don't want you to incur payroll taxes because this is not a payroll related item. This is a reimbursement, right? As such, we would establish you as a vendor. We would take the receipt that you gave me and we would enter it in. We would categorize code it so the expense is being captured in the right place. You went and bought some paper for the office because we ran out of paper, supplies and material, right? We put the dollar amount in and we hit pay, just like we did a vendor. The next day, that money shows up in your bank account as an employee, your pay. The system takes that expense and category codes it based on what we put in. And now we have reimbursed an employee, but we've captured the expense in the right category code moving forward. If we run a report for sales and material, right, it's going to show that we paid Owen X amount of dollars, but it's also going to show that that expense hit supplies and material. Does that answer your question and make sense?
Yeah.
Okay. Okay. Pause there for a second to see if there's any follow-ups in regards to that. Oh, man. Gonna go through expenses, match transactions. So let's talk about the matching of transactions really, really quick, only because most people in here that have worked with QuickBooks for any period of time and linked their bank account up are used to seeing the transactions show up and matching them with the corresponding invoice. And this is a big part of what I was talking about, staying on top of and making sure that you're being active and proactive in the way that you go about doing it. The one thing I just want to highlight here is this. Once you start tagging, the system will start remembering. It's one of the really, really nice aspects of QuickBooks is that the system will remember what your last and not make you review. It will just ask you to confirm. But one point I want to make really, really clear though, is just make sure when it's a confirmation that it has the correct category coding. There is a reason that the category highlight is right next to the review and confirm. Because though the system can make the association with the vendor, it can't always make the association with the category. That's a little bit confusing, David. Can you explain? Yes. You may purchase more than one product from a vendor that have different categories. So I bought paper, and then I bought stuff for product development. I want paper to hit supplies and material, but I want the stuff that I bought for product development to hit product development. You do have the ability to go in and split those expenses so that they are hitting the correct category code, which in turn ties back to us when we do our budget. We have a clear understanding of where expenses are hitting and what particular line items within the chart of accounts they are hitting. Again, keep this in mind when it comes to the reviewing and the confirmation of those transactions coming over from the bank. Okay. The system isn't always right, which is why you do need to be diligent in reviewing those and making sure that they are hitting the correct category codes. So this is where the user created rules comes into play. If any of you have spent any time in QuickBooks Online right now doing just what I talked about, you'll actually know that it auto-populates, that little rule box comes up and it says, if I see him every time, can I process my, you do. I love the rules within QuickBooks. It makes your life a lot easier. Here's the one bit of advice I will give you in regards to rules. Don't put a rule behind a vendor that has more than one category. Okay? Because here's what's going to happen. It's going to tag it all to one category code based on that rule. So an example I would have here would be Amazon. We buy multiple different things from Amazon all the time. And when it comes in on my QuickBooks and I track my expense on, it just shows the confirmation because it's seen Amazon so many times. But on all honesty, if I click on it and go into that particular trend, there's like 9 entries there with 9 different category codes. And if you had created that rule, it would have taken that and tagged it all to one category, which means we would not be capturing the expense in the right category. We'd be capturing it, just not correctly. Make sense? Okay. And it's basically telling you exactly what I just said. Not going to go through that. I am going to spend some time here. Okay. My favorite part of what I do today. I love reconciliation accounts, right? It's like a geeky thing for me. I know it's weird. But the reason I love it so much is it's always right. And when it's not right, it means that we're wrong. And I like to know when I'm wrong because it means I can do something about it, right? Before I get into this, I'm going to go back to something I said in the beginning. The key aspect of this, the philosophy that I use, is the bank is the one source of truth. The bank is always right. The bank is never wrong, right? And it should be that way, right? I mean, we do the deposits, we do the withdrawals, but our interactions are limited to that to the bank, and that's why I say it's the one source of truth. So if we know that the bank is always accurate and QuickBooks is off, we know where the problem is. Conversely speaking, this process will point out exactly what we're missing. And the most important part, because this is what comes out of it, is it will show you the expenses that you didn't capture. Because that's what comes in. It doesn't show the revenue, because trust me, you guys have no problem making sure the revenue's there. But the expenses, man, we don't like expenses and we like to turn a blind eye. This is going to help make sure they're all in there and it ties back. Okay. So what the system does here is it matches the transactions in QuickBooks with the transactions at the bank, and it does it line item by line item. So when we put the beginning balance in, it asks what was the beginning balance, and it wants to know what the ending balance was. And then it just goes through it pulls all the data in from the bank, and it goes line item by line item, it matches them up. It then generates a report for you that shows you exactly what is cleared to the bank and what's cleared to QuickBooks. And if those totals don't match, it will tell you what the variance is. That variance is then what you need to go and find. Here's the good news. If you're using the one source of truth, the only place that it can be missing is where? In QuickBooks. It's not missing anywhere else because we know that the bank is always right. So this is where I talk about having it set up in this manner makes your life so much easier. Because you're like, I'm off by 30 cents. Somewhere in QuickBooks, I missed 30 cents. I put that $407 bill in and instead of putting 407 in, 30 cents. Okay. So, oh my gosh, that's, credits. I'm going to show you an example outside. Where is my Zoom? Okay, let's reconcile. It's the window. Okay. So I'm actually, the last exercise that we're going to actually walk through today is I'm actually going to show you how to start the process of reconciling. And the good news here is that the only thing you need information-wise is your bank statement, right? As long as you have your bank statement on hand and know what the ending balance was and the ending date, the system will automatically know what the beginning balance was based on your prior entry, right? And literally those are the only two pieces of information you need to go ahead and get this process started. Now, the nice part about this is once you enter that, like I stated earlier, the system will actually go out and map every transaction that has hit the bank for that period of time and then tie it back to the ending balance. If there are any discrepancies showing up, it will be reflective. Now, in my case, I actually don't physically have a bank account linked up to this one, so I physically can't actually show you. But I do want to be able to show you exactly, let's see if I can just give it a flat number and show you what the next page looks like. September. So this is actually the page I wanted to show you that. So the system is basically taking a look at the statement balance and seeing that the ending balance was $50,000 and it's showing that zero has cleared. So basically I've got this huge delta here. And what would normally happen is you would have a list of deposits down here that have been done at the bank, and they would be highlighted in red to show you the ones that are not associated. And this is how you would go ahead and tie these balances out within QuickBooks. Now, the nice part about this is the system will actually show you both the amount of deposits and what is cleared, and then the remaining balance. And with those three pieces of information, you should be able to go back into QuickBooks and see exactly what you're missing. Now, I will tell you, I personally print off the statement and have it right next to me, and I just go through it line by line, check it off. I do this once a month. It takes me about 30 to 35 minutes to get it done. But going through the actual exercise itself is key, because you'll discover a couple of things. You'll get a better understanding of where your funds are going, what you're being charged, and more importantly, you'll know what your balance on hand is. You take all of those and you bring them together to create a clear picture of where you're at from a cash flow scenario, and all of this dates right back to our first discussion, which is managing cash flow, making sure that our bank account ties back with our QuickBooks online. So again, just a really, really brief summary of what it takes to do the reconcile. By far, the most intimidating thing that I show people in QuickBooks besides tax, I want to put the same offer that I did out at the beginning of this conversation. If you haven't done this, you're doing it for the first time, I'm absolutely volunteering to walk you through the process, It'll literally be the easiest meeting or Zoom call I have ever done, but I am very aware of how intimidated people can be with regards to reconciling their accounts in QuickBooks. So again, please take me up on my offer. I would love to help you out in regards to that. With that said, that is everything that I have for today for QuickBooks Intermediate. If there's anything in specific that I didn't touch on, please raise your hand and let me know, and I will talk about it. The other part is we actually send out a survey after this. I tend to make my classes a little different than most because I want it to be more of a learning scenario than me just talking. I know this setup is a little bit different because I don't have as many people involved in person, but we will be sending out a survey after this. I really, really do appreciate your feedback. If you think that there's more that I should be doing, if you want me to spend more time in QuickBooks, if there's specific line items that I'm not getting to, all the feedback really does help me kind of streamline this process as a whole to make sure that I'm addressing the needs of the individuals out there. Again, this program is for small businesses out there, and we understand how important you are to our local community. That's why providing these services are really, really important to us, as we understand that you guys are the lifeblood of our local communities. And so, again, the SBDC is here to provide services for both individuals and businesses associated with that. And if there's anything we can do to help you out in the meantime, don't hesitate to reach out to us. With that said, I'm going to take a deep breath and see if there are any additional questions or concerns. If anybody wants to stay on the phone and follow up with me afterwards, absolutely open to that. I will be following up with an email tomorrow morning with the training guide. It'll have everything that we went over today and everything that I skipped over as well. You are more than willing to follow up with me once you get it if you do have additional questions. And again, I'm more than willing to sit down and meet with anybody to go over any questions or concerns that they may have as it relates to QuickBooks. And with that, that is QuickBooks Intermediate for today.
Thank you, Dan.
You're very welcome. I do want to make sure that we've got everyone's email address so I can send the study guide out afterwards.
Yep. Well, I'll be sending a follow-up email in the morning with the recording, and I can complete the study guide next call.
Fantastic. Fantastic.
Um,
Questions,
no.
concerns? Yeah, bring it on.
I mean, maybe it's more like a personal thing, but like, where do you kind of draw the line on a business lunch versus not a business lunch?
Sure, it's an easy question.
Okay.
So first of all, we have to be.
Yes. Yeah. Yeah.
If you are meeting with someone that relates to your business that is not an employee of your company, this is business.
That is not an employee of your company.
It is business. That is the clearest definition. Now, let me put a caveat. I build $1,000 into my budget every year to take my staff out. Do you know why I do that? Because I want my staff to feel valued.
Yeah.
I want them to know and understand how much their work means to me.
Mm-hmm.
It's still a business. And I make that decision with the cost.
Mm-hmm.
I put it in the budget and track it. I don't just walk in one day and go, "Bro, I'm going out to lunch." Put a line out in my budget and I say, this is for me to take care of my employees. I call it hosting and I call it. You get to make that choice as a boss. Okay?
Mm-hmm.
But if you want the definition from me and what I use internally,
Mm-hmm.
it's anyone that's not an employee that I'm meeting with that relates to business for my business. Period. And that's not just lunches, that's drives too. Because the two areas that you miss out on mostly are capturing your lunches and capturing your travel. Right? Because there's this mentality, I'll just absorb it, I'll take it. You know, you're not. We talked about why you're serving yourself in service. So that's kind of the line. Also understand this, you're the role model for everybody else. How you act, how you go about your business makes it acceptable for others.
Mm-hmm.
So if you're going out every day for lunches with Joe Snow, you're claiming this business lunches, you think your employees will think they can do it. Same thing. Okay? So set the example, set the tone, moving forward. But take care of the employee. And if it is a business matter, you're in charge of them.
Okay. And like, if you're saying it's relating to the business, it's like potential, like anybody who could be potential. It
It
does.
could be potential vendor, it could be potential customer, it could be meeting someone about building a house. If it's business related,
Okay,
it's as simple as that. You're meeting your mom to talk about what a great job you're doing building your business. It's not as. If you're
Aw.
meeting your mom, and she's writing you a $5,000 check to put it in your business, that's discipline.
gotcha. Okay, sounds good.
Does that make sense?
Yeah, thank you.
This is a very basic question, but is it really bad if you miss a receipt here or there? No? That's okay. Uh-huh.
Because it's not bad habits form.
Right.
It's by making small things acceptable,
Mhm.
right?
But the IRS isn't gonna be after you if you miss a receipt. Okay. And
Make
then,
it, so here's what I do. I have a material, gosh, I'm taking a moment. I have a material threshold,
Mhm.
so. What here? So if the receipt is less than $50, I just do a watch receipt. I don't care.
okay,
I don't. Because it's more time and effort for me to pick up the phone, call the guy, get him to send. That's taking away from mine. And I'm being charged $30 an hour. I'm wasting the company's money. Do the loss receipt and get it. That's an new trend. Here's what I don't want to see. Don't do it 2 months ago.
Uh-huh.
Because then I see a pattern and I'm like, you're taking advantage.
Mhm.
And this is where you need to have the control in place to make sure that's not.
Mhm.
So you lost the receipt, great. Don't do it again.
Okay. And a couple of related questions. One is if you have a subscription, say it's like $12 a month software, do you go in every month and get that same receipt even though it's like, no? Would you do like the first few and,
Well, I just, normally when you're on a subscription, they're gonna send you an annual deal too.
Mhm.
So a couple.
oh, okay,
First of all, if you're gonna do subscriptions, do annuals. Okay,
Okay.
if the cost savings associated with doing an annual subscription is between 15 and 20%, you know that you're gonna use it the entire year, do the annual, get the cost, take the sale. As it relates to actually having an invoice on hand, no, and I'll tell you why. If they're billing you monthly, where is it hitting?
your
The bank.
bank.
So you're capturing that again, and wow, the one stuff the truth, man, thought I could miss that one. But again, it's just highlighting, once you have this, that subscription hits the bank, which means when you come in Monday morning, there's that $12 subscription fee waiting for you. So you've actually automatically captured it. Whereas, as opposed to you paying $144 one time a year, you're just paying $12 4 times a year. So
Okay.
that's mentally how to think about it. Again, the good news for you is if you have it set up with the bank in the way that it is, you will always capture it. It will never not be captured because it's being paid,
Mhm.
right? And it's in the bank and then it's showing up in QuickBooks. So.
Yes, yes. And then the last question related to this is when we're having like payments coming in, we get payments through Stripe and then we use like Commerce Sync, which sends it to QuickBooks.
Mhm.
So we don't need to be like putting in a receipt or invoice there. Okay, cool.
No, that's
That
just
would be a
straight
pain.
cut. Yeah, no, you don't want to make more work.
Yeah.
In that situation. So there's one other thing that I do want to bring up that we haven't talked about, and it only because it relates very specifically to expenses. Here's one thing that I do see in the system that creates issues for companies like you, processing through Venmo, Square, and what have you, is capturing the credit card expense. That it becomes a real issue in credit cards. And what I mean by that is you bill your customer for $100 and you get $95 back in a payment. You have two choices currently, right? Number one, you go back into that invoice and you add that line item in as an expense, which reduces the bill from 100 to 95, which will then wash against the payments you receive. It will also capture the expense, the credit card expense. Because a lot of the time what's happening is you're invoicing the client for $100. You're only getting 95 back, but you're not capturing that $5 as an expense as you should be. So that's one methodology. The second methodology, which is the one I prefer, is to bill the customer for the $100, only get paid the 95. But the offset is that we get a bill statement from Venmo every month, and we enter the total expenses for the credit card expenses as a one-time payment. So instead of entering, $5 in fees for 24 invoices that we have to go back in, we create Venmo as a vendor. And when they send us the bill at the end of each month, we process in what we paid them, which is then an offset against the expense that we invoiced them for. I know that's kind of complicated in the way that I explained it, but really, instead of capturing the expense on each individual invoice, right, we simply do it as a one-time expense at the end of the month when we're closing.
Okay, so we do have that, exact thing that happens for us with our Stripe fees,
Yep.
except for we're not like creating a bill in QuickBooks
No.
saying we're invoicing people. So when we get the payment in from Stripe, it doesn't know that we're missing.
And
a
that's
little bit.
fine.
And so is that fine? We
That's
don't have to-
absolutely fine too.
Okay.
In fact, that might be a better way to go about it, because then when we get the Stripe bill in at the end of the month, it's just that line item that is the expense.
Mhm.
So that's fine, as long as I know that that total still ties back to what we have in Stripe.
Okay.
And do you see how it makes it that much easier to go about it as opposed to, trust me, I've got plenty of people that they go into every invoice, every single time, and have to create, and it's very, very time consuming, right? So, and where this gets a little bit more complicated, and I won't go down this path right now, is when you have multiples. So you have Venmo, you have Stripe, you have all of these, and they're all charging different rates.
Mhm.
Right? And so that's why, if you use my system, you'd have 3 bills at the end of the month for 3 different, that'd just be $1 amount, right? As opposed to, oh, did we use Stripe this one? Who should Stripe charge this? Oh, yeah, it's what does that mean? So this is where it becomes that much and that's why I bring it up, because what ends up happening is people don't capture the expense together because it's like, hard to track. No. But what are we losing out on? Capturing the expense for the business. More importantly, it tends to be a percentage, right?
Mhm.
I mean, they're taking 2.5% at best of times, so it's a substantial expense associated with your business. You want to make sure that you capture.
So you think it would be better to go in and have them like, invoice us or, send us that bill at the end of each month?
And then just do it as a one-time bill in the system, because then we know exactly, and you can tie it back. That's the nice part. You can see, yeah, we got that in, that's the cost, that's the expense associated with that. Yeah, I have a lot of questions that come up with the credit card processing, credit card fees. How do we capture it? How do we ensure that we're capturing it? So yes, this is very, very common to be following. Anything else? Throw it out there, people. No? Okay, great. Well, thank you very much to everybody for attending today. Again, that email will go out tomorrow. If you have any additional questions, concerns, thoughts, comments, please don't hesitate to email either me or Madison. And thank you for attending today.